I'm joined now by the president of the Atlanta Federal Reserve, Raphael Bostic. President Bostic, thanks so much for sitting down with me here in Jackson Hole.
Well, thanks for giving me some of your time. It's good to be here.
It's good to see you in person for once.
Exactly right.
Fed Chair Powell said earlier today that the time is now to adjust policy. Is a 25 basis point rate cut in September a done deal?
I wouldn't say a done deal. One of the things I would say is we're trying to be data dependent as much as possible. And what we've seen over the last 2 or 3 years even are surprises, head fakes, all those sorts of things. So when I think about what was appropriate for policy, for me, it's if the data come in a way consistent with what we've seen over the last couple months, that could be the most appropriate way forward. But I'm really trying to wait and see what happens.
But you're still eyeing a rate cut for September. It's on the table, right?
Well, everything is on the table at every meeting. So every meeting is live. What I'll say is this in the context of September. Yeah. So for most of this year, my view and my outlook was that we'd do one cut this year, and it would be in the fourth quarter. Inflation has come down faster than I expected. The labor markets have weakened considerably, so that we're back to sort of a solid, strong place. And that's all suggests to me that it's going to be appropriate to pull forward the beginning of our rate move. So being open to something in the third quarter, September, November, is definitely in play.
So like you said, you were seeing one rate cut sometime in the fourth quarter. Now it's been pulled forward. I know you don't have all the data in hand at this point, but given your outlook, what does a potential baseline path for you look like when it comes to monetary policy this fall?
Well, that's an interesting question. I don't actually have a baseline path at this point. What I know is that we need to start normalizing our policy as our inflation gets closer to target, and to make sure that we don't see undue damage in labor markets. Mm-hmm. I think we're at a place now where you can start to see the momentum in labor markets is starting to wane. Inflation is coming down. Those are the conditions for starting to move policy.
To your point, Fed Chair Powell made very clear that the focus is shifting to the job market. He said, quote, "We will do everything we can to support a strong job market." The unemployment rate has drifted higher. Granted, a big part of that is because more people are joining the labor force. But given the push, do you worry that something more sinister is ahead? How much of this turn to the rate cutting cycle has to do with staving off a downturn in the job market as well as the economy?
Well, I'm a central banker, so I get paid to worry. So I'm worrying all the time. And I would just say, one of the things on the labor market side, we do intensive investigation to try to make sure we're on the pulse of what's happening in labor markets. Mm-hmm. So I talk to business leaders across the country. We do surveys to try to get a sense of where they are in terms of what they're thinking about labor markets. They tell us a couple things. One, they're not as eager to hire as they were a year ago. Things have definitely slowed down in that regard. But two, they don't have mass layoffs in their outlook. That they're really expecting demand is going to stay stable. They have a workforce that can meet that, and that's all positive. So the question now is, do things happen such that weakness accelerates? Mm-hmm. And that's what we're going to try to keep tabs on.
Yeah, to your point, President Bostic, historically, when we've seen a 0.5 percentage point increase in the unemployment rate from its low over the past year, it's tended to jump a lot more, and we've been in recession. So my question is, can the labor market continue to cool at this pace without a recession?
Well, I think it can. Now, we'll have to see whether it does. As you noted, a lot of the perceived weakness in the market is because more people are looking for jobs, right? So you're seeing a labor supply response, which is actually a good sign. I think if people see that there's opportunity and they're trying to chase it, that says there's optimism, there's energy, and there's productive potential. If that's the nature of the perceived weakening that we see in the numbers, we can live with that. If weakening comes because we start to see more and more businesses say, well, I got too much labor for the demand and I got to let people go, that's a different scenario, and then that would warrant a different policy response.
When I looked at the Fed minutes, there were several officials who said that the case was there for a rate cut in July. Given what you're seeing now with the job market, do you think you're late? It sounds like September is okay based on what you're hearing and seeing from contacts in your district.
Well, I'll tell you, there were contacts in my district who were telling me that we should do something in July. It just was not the vast majority of them. So, what's been interesting is that in January, nobody was saying that. And we're starting to see this evolution, which says we're on the journey. The journey is continuing such that the beginning of our normalization of policy, it needs to happen sooner. It'll be interesting over this next couple of weeks as we move into the next meeting. I'm really looking forward to hearing from our contacts, my directors and others, to see if that trend is continuing such that a majority do feel that we need to move.
So do you think the chances of recession are still low?
A recession is not in my outlook, and it hasn't been in my outlook for a long time, and it still isn't. Everything I hear tells me that there's enough momentum, and we should still see growth in the U.S. economy.
What is your outlook for the unemployment rate? And, is there a certain level that you need to see the unemployment rate jump for you to consider faster cuts, more cuts this fall?
I don't have a specific number per se. I think a lot of it is in the labor market dynamics. A couple things that I would say. We're still seeing wages that are quite positive. They're higher than the rate of inflation. So the average American worker is making progress. Their purchasing power is increasing. The second is that we're not seeing signs that there's a large amount of layoffs that are on the horizon. And as long as that holds, I think that we can continue to see strength and that our policies can just do what they need to do to get us back to our 2% target.
So is this sort of a slower path down to neutral, more gradual? I mean, how quickly do you think you need to get back to the so-called neutral rate? And of course, there's questions around what the neutral rate
is at all. So I would say this. Labor markets, they're weakening but not weak. Mm-hmm. Inflation is coming down faster, and some of it is because of supply side. Some of it's because of the prices in housing are starting to move in ways that we had expected for a long time. So I think that there's a pretty good case to be made that we can get to target sometime in 2025, which would mean our policy rates need to move commensurate with that.
You mentioned housing. Do you think once you begin starting to cut rates, that unlocks some inventory on the market and improves some of the supply situation that Americans are dealing with right now?
Well, it could. So it's an interesting thing. As you know, so many homeowners today are locked in to rates that are extremely low. That does two things. One, it reduces the amount of supply that's on the market. But two, it changes the equation for families to move. So if you had a better job opportunity, it would have to be a lot better because you'd have to you'd have to purchase into a higher mortgage rate. As the rates start to come down, and you're starting to see mortgage rates move right now, that calculus changes back and it normalizes. And I'm hopeful that we'll start to see something more akin to what we were seeing pre-pandemic. I think that transition is going to be slower than some might expect, but I think that's what's going to happen.
And before I let you go, Fed Chair Powell has been fervent about central bank independence and the importance of that when it comes to making monetary policy, not letting politics intervene. We've heard from candidate former President Trump. He believes the president should have a say in setting policy. Downplayed that a little bit this past week. But what's your response to that? What are your thoughts on that?
So I don't actually have a response to any of that stuff. What I would say is this. The Fed has a long history of doing what's required at the time that it's required with an eye toward the long-run trajectory of the U.S. economy. We're going to continue to do that. I'm committed to continuing to do that. And if that happens well, then the American economy will grow, it'll be resilient, it'll be strong, and Americans will continue to have the high quality of life that we've seen for many, many years.